Hello, everyone. We just finished in the last video talking about donation tax credits. In this video, we're going to talk about medical expenses. So, in order to claim medical expenses can include things like dental visits, prescriptions, pharmaceuticals. They can occur for glasses or medical equipment to help you get around, like hearing aids or wheelchair equipment. Um, the CRA has a qualifying medical expense list. It has a folio where they just list all of the acceptable medical expenses. So there are some medical practices that aren't fully recognized or at least have no governing body in Canada. An example of this, I think, is homeopathy might be or may not be on the list. I think the consultation can be claimed, but the supplements you get from them are not. But anyway, if you have a medical expense, you can check the list to see if it qualifies to be included in the medical expense credit. So if it's a qualifying medical expense, you can tally them up. If any of the expenses are reimbursed, you can't use them for the credit. So if someone has some dental insurance through their company, through work, let's say they go visit the dentist, it costs them $200, but their insurance will pay back 180. You can't claim the 180 that's getting reimbursed. So we'll have to only take the difference. We paid 200, we got back 180. That $20 difference is your medical expense. This mentions the formula on the next page, but I will get to it. D, E, and F come into place for dependents over 18 years or older. And again, with like donation credits, you can claim all medical expenses on one return. The reason for this is the formula for medical expenses, there's a threshold you have to get above. That threshold is usually 3% of your net income. There is a maximum threshold, but generally we use 3%. So if I make $50,000, 3% of that income is $1,500. So if my total medical expenses is under this threshold, then I don't get any credit. If my medical expenses total over this threshold, the difference between what I paid and my threshold, that is available for the credit base. So we need to get over this threshold. So if I have, let's say my spouse and I both make $50,000, both of us have a 3% threshold of 1,500, that means we would need to pay over $3,000 of medical expenses to get both of our thresholds over. But that's a lot. So what they allow us to do is we can take all of our medical expenses and combine them on one return. So we only need to get over that 1,500 once. So by combining our medical expenses, we'll leave a lot more available to contribute to the credit base. Medical expenses can also be claimed for any 12-month period as long as that 12-month period ends in the year. So we might have this case where we might have medical needs. Maybe perhaps I get in an accident or let's say I get in an accident. So in November, I get in an accident. I'm injured. I have certain hospital visits, perhaps a procedure that all takes place in December. So I've paid some medical expenses. And then in January or February, I go through the physiotherapy to recover from the procedures. So I have some expenses in November and December of one year, some expenses in January and February. Now, separately, they might not be enough to get over my threshold, but combined, they do. So the government allows us to sort of move this 12-month period. Normally, we have January 1st to December 31st. But if we move our 12 months, say maybe September of last year to August of this year, we can catch that November, December, January, and February in the same period. As long as the 12 months ends in the current tax year, it can be claimed. Once expenses are claimed in one tax return, they're not available for the next tax return. So that's to make sure that I used September to August 1st when I did this tax return, But on the next tax return, I can't say, okay, now I'll go back to January to December and pick up those January, February expenses again. I can't do that. I've already claimed that period. So any further periods I claim can't include those expenses already used. So that's the one thing to remember. The 12-month period must end in the year, and you can never claim the same medical expenses twice. So back to spend a bit more time on this formula. This entire formula multiplies by 15%. That's our usual credit rate, so we can put that to the side for now. B is concerned with our entire medical expenses paid minus our threshold. So our threshold is either 3% of the individual's net income or a maximum threshold of 2,834. So if I have $50,000 of income, 3% is $1,500. So that's the lower, that's my threshold. But if I was to make $100,000, 3% of that is 3,000. That's over our maximum threshold. We'll use the 2,834. This amount is indexed, so this threshold goes up every year. So next year it might be $2,900, but the 3% is a standard rate we've had for a long time. So we'll always use the smaller of the two thresholds. So our ability to combine medical expenses, we will often combine medical expenses and put it on the lower income spouse. If I make $100,000, my limit is 2,834. If my spouse makes $50,000, their threshold's only 1,500. They have a smaller threshold. So if we combine our medical expenses on the lower income, we have more expenses available to get the credit. But if the lower income person's income is so low that they don't need the credit, say their basic personal amount is already removing their tax obligation, then we'll want to put the expenses on the higher income person. We don't want the credits to be lost in the lower income. So we put it on the higher income individual. So that's this balance we're trying to get. The lower income individual has a lower threshold, but might not need the credits. The higher income individual has a higher threshold and can definitely use the credits. So we always consider which spouse has the best outcome for the tax returns. If you have children under 18, their expenses tally into this B value. So you can have yours, your expenses, your spouse's, any of your children that are not adults under 18 years of age. If your dependent is 18 years of age or older, you can still use their medical expenses, but you have to get over that person's income threshold. So they'll have their own threshold we need to get over. So our expense will apply our threshold, and we can add to our medical expense base any of our dependent expenses that are over their threshold. So, as an example to show this in action, an individual with net income of $100,000 and medical expenses of $5,000. His 20-year-old dependent has medical expenses of $10,000 and net income of $9,000. So we're going to do this in two parts. Starting with the parent, the income of $100,000 is going to net a threshold of 3%, $3,000. This is above our maximum threshold of 2,834. So that's what we're going to use. So for our $5,000 of medical expenses we paid for ourselves, we get to hang on to 2,166. We take our 5, subtract our threshold. That's our credit base amount. To this, we can add the $10,000 of medical expenses for the 20-year-old son, but we have to subtract from this number that person's threshold. So our income was $100,000, so we were above that 2,834, but our son's income was only $9,000. 3% of 9,000 is 270, well below that maximum threshold. So we will use the $270. So $10,000 minus the son's threshold of 270 leaves $9,730 left over to contribute to that medical credit base. So our medical expenses can use 2,166. add the 9,730 from our child, that the total credit base is 11,896. Now that we have that credit base, now we apply that 15%. So the actual effect of our taxes is $1,784. So we will save $1,784 on our taxes to sort of recover a portion of our medical expenses that we spent. Okay. So going to the exercise on that question, we have Maxine Davies and her spouse Lance Davies have medical expenses for 2025 totaling $4,330. While Miss Davies has net income of $150,000, Lance's only income is $360 in interest. Because Lance's income is so low, his threshold, his 3%, is going to be tiny. But Lance's basic personal credit is probably covering this $360. Lance has $16,000 of basic personal amount. So the tax credit from that value is removing that 306, the taxes on $360 of income. So Lance doesn't need the medical expenses. Maxine's income is very high, so she does need the medical expenses to reduce her tax obligation. So we'll be putting the medical expenses on her return. So Lance has very low income. The couple has 3 children. Mandy is 12, has medical expenses of $4,600 and no net income. Max is 21, has medical expenses of $8,425 for 2025 and net income of $8,250. Matt is 23, has medical expenses of $120 and net income of $6,000. Miss Davies pays all of the medical expenses. How much medical expense tax credit can we get for her? So we have 3 children. Only one of them is below the age of 18, Mandy. So Mandy can add her expenses, $4,600, to the expenses that Maxine and Lance have for themselves. So 4,330 plus 4,600. So the total expenses for Maxine and the dependent family is 8,930. We're going to subtract Maxine's threshold, which because her income's so high, she'll be using the max threshold amount of 2,834. So from the 8,930 of medical expenses for Maxine, Lance, and Mandy, 6,096 of them, dollars worth of them, will be used in our credit base. To this number, we can potentially add the excess medical expenses for both Max and Matt. So these 2 children are over 18, so we have to consider their income thresholds. Now, let's start with Matt. Matt is 23, but he has a very small medical expenses, only $120. His net income is $6,000. So $6,000 times 3%, his threshold is $180. So his expenses paid of $120 don't make the $180. We have to get over that threshold. So Matt will not be able to claim any medical expenses. Max is 21, has medical expenses of $8,425 and net income of $8,250. So $8,250 times 0.3 or 3% is $247.50. For simplicity, we're going to round to 248. So 248 minus the total expenses paid for him, 8,425. Max will be able to add $8,177 to the expense we already calculated of 6,096. So to try and put this in a different way, or hopefully easier to understand, we do the medical expenses like these in steps. So for Maxine and Lance, we have the 4,330. Mandy's under 18, so we can add those expenses in. Maxine's medical expenses is 8,930. Sorry, so many M names. Maxine's income threshold amount would be $4,500 because her income is $150,000. Since her income's so high, we can use the maximum threshold of 2,834, So 8,930 minus 2,834, those medical expenses allowed for the credit is 6,096. We showed that Matt's income threshold is $180 and Max is $180, but the medical expenses is only 120, so that's going to amount to zero. So we can ignore Matt for now. This threshold of 3% is compared against the maximum threshold, but because their income is so low, we know we're not going to use the 2834. So I'm just doing a 3% calculation for their income. Max's income was 8,250. So 3% of his income is $248. So of the medical expenses paid, 8,425, we subtract 248. That leaves $8,177 worth of medical expenses available to add to Maxine's total. So that's 6,096 plus 8,177 combines to $14,273. Those are our allowable medical expenses. That's the credit base that was over our thresholds. We apply amount A, the 15%, which means the total savings that Maxine will have on her tax return will be $2,141. So that is medical expenses. Is there anything to contribute? No. So that's medical expenses. That is a high priority calculation. So please go through this and understand why we add Maxine, Lance, and Mandy together, why we use these potential two thresholds, and how we add Max and Matt's credit amounts to that total. Thank you for your time. When we come back, we'll discuss additional credits that aren't going to be as complicated as these donation and medical expense calculations, but there are a handful of calculations to get into. So look forward to those videos. Thank you for your time. I'll see you in the next one.